Hi there, my name is Jonathan Roth. This is Cambridge House Live. I am joined now by Doug Casey. He is the founder and chairman of Casey Research. Doug, thanks very much for joining me.
Pleasure, Jonathan.
We are, I think, poised for some really dangerous economic times, especially if I read what you're writing, and if I believe it, it would appear that we're on the precipice of something huge. Spell that out for me, unpack that.
Yeah, I believe that we entered something that I call the Greater Depression in 2007. And then we went through the leading edge of that storm in 2008, part of 2009, and it was grisly. It was unpleasant, it was grim. But as governments all over the world printed up trillions of currency units, Europe, China, Japan, the US, they papered it over. And they papered it over in the way that perhaps depositing $10,000 in everybody's bank account Monday morning would make everybody feel wealthier and make them feel good for a moment. But that's not a solution to the problem. So at this point, I think we're going back into the trailing edge of the hurricane, and it's going to be much worse, much more serious, and much longer lasting than what we saw in 2008 and 2009. So rig for heavy running. I can only predict that we're likely to see genuine financial and economic chaos over the next decade. And this depression that started in 2007 is going to last, I think, much longer than the depression that started in 1929. That lasted until 1946. This one could go on much longer and be much more severe. And why do I say that? Because this time, especially, governments are much more powerful than they were in those days, number one. And now they're not only doing the wrong things, they're doing the exact opposite of the right things. The U.S. military has become like a huge gold-plated hammer. And when you have a hammer like that, everything starts looking like a nail. If the dollar, the U.S. dollar, is an IOU nothing on the part of a bankrupt government, then the euro is a who owes you nothing on the part of 20 even more bankrupt governments.
I think Canada's not in this grave situation that America finds itself in, although you never know what the future might hold.
Sure.
If Canadian politicians have their way, Canada could one day be facing this predicament. So every time they give us stimulus to create a phony recovery, the stimulus wears off and we get back to recession, and now we look for the same quick fix to get the phony recovery going. But we don't want to allow a real recovery, because that means some real bitter tasting medicine needs to be swallowed. And that's going to be in the form of higher interest rates. There's going to be lower real estate prices, stock prices. Some banks are going to fail, and the government is going to have to seriously cut spending, dramatically to everybody. We might have to restructure our debts so that our bondholders don't even get paid in full. But clearly, people who are expecting Social Security can't get all that money. People expecting government pensions can't get all their money. Current government employees can't get their current paychecks. They have to have reductions. A lot of government workers need to be let go. We simply can't afford to pay them. We've got a cancer in our economy that needs to be cured, and it's not going to be painlessly. Certainly some people, it won't feel it as bad as others, but for people who are dependent on government, who are living off of a government check, things have to change, because the taxpayers who are making that possible can't afford it. The government has promised too much to too many people to buy their votes. And the politicians have to level with the American public, tell them how bad the situation is now, and what really needs to be done to grow the economy. Because more government fixes, more printing press money, more borrowed money, more consumption, that's not going to do it. This can't just go on indefinitely.
Right.
And the numbers are just so big for the U.S. Interest rates have got to rise, or the Fed is going to have to print so much money to keep them from rising that inflation is going to flare up in a way that even government numbers can't hide it anymore. The world's going to see the predicament we're in. There's going to be tremendous pressure on the dollar. Even recently, look, Japan and China just announced that bilaterally they're not trading in dollars anymore. They're going to trade in their own currencies. And this has been happening with other countries too. And as the dollar is taken out of more and more of global trade, and it's going to continue to, to lose its status as a reserve currency until the point where it's no longer a reserve currency at all. Because if we keep doing this policy of stimulus and growing government, it's just going to get worse for the average American. Our standard of living is going to fall. Eventually, our currency is going to collapse. Prices are going to skyrocket, and it's going to be a lot worse for the average American, especially when the government is the one looking for a bailout. And right now, you got countries like first Greece, now Spain looking for a bailout. Okay, yeah, Germany could bail out Spain if it wanted to. It's a mistake. It could do it. Who's going to bail out America? Right. We're so enormous. It's the expression "too big to fail." Well, we're too big to bail. Meanwhile, look at how much money the Chinese and the Japanese have already spent trying to prop us up. They flushed trillions down a toilet trying to prop up the American consumer, but it can't be done because we're all broke.
So, what extent do you think inflation is around the corner? And do you think we're going for Zimbabwe-style inflation with the U.S. dollar?
I don't think it's around the corner. I think it's here. I mean, we're on inflation street right now, or inflation alley, whatever you want to call it. What might be around the corner is much worse inflation, or hyperinflation, depending on how long we push this monetary envelope. Right? If we keep doing QE, if we keep shooting the economy up with stimulus until it overdoses, then we get hyperinflation. If, on the other hand, we recognize the error of our ways and we reverse the policy, then we'll put a brake on it. But the longer we wait to do that, it's going to be. But I think gold is much better. I think money is safer than any currency.
Where do you think gold's going?
A lot higher.
Yeah.
Yeah, and gold's been trading.
Can you define that?
No, because I don't know how much money they're going to print. But I think it's going to go a lot higher. And I think right now gold's kind of acting as a risk asset. It's not. It is the safe haven asset. It's the treasuries that are the risky asset that somehow have stolen gold's luster as being a safe haven. They're not a safe haven. And certainly when people start to worry about treasuries, right? Treasuries can't be a safe haven from treasuries. So people are going to have to look for something. And gold is real money. It's not just a money substitute.
Western societies have probably been living beyond their means for 25 years. We've been consuming as a group of people more than we've been producing for a very long time. And we've been financing it by mortgaging our children's future. The question becomes, how long can we mortgage our children's future, and how many people are willing to buy that mortgage? I think the reckoning is approaching when we have to answer those questions. I'm not sure what the answer will be, but I'm certain that the answer will be interesting to all of us. One of the roles that gold has fulfilled for 3,000 years has been catastrophe insurance. Other roles, to be sure, a medium of exchange, a store of value, but also an asset class that has done reasonably well in very, very, very uncertain times.
You've been saying that we are right on the precipice, if we're not already there, of some sort of global recession. That, we were in one in 2008, came out of it a bit, looks like we're maybe going there again. You're pretty clear in terms of what you're writing that we are there. Unpack that for me a bit.
Yes, I think it's a synchronous global slowdown. You have many of the countries in the Eurozone already in the classical definition of negative quarters of growth. You have the UK there, Japan's there, and the data is just that there's no such thing as decoupling. So the incidence of downturn in those economies is 70 to 80% correlated with North America. So I think that although it hasn't shown up in negative quarters yet on this side of the ocean, that it's very much in the works, and we may find, retrospectively 3 months from now, I think we may find that we were actually entering the downturn, so to speak, in North America right now.
So we are in the midst of what some people might say is a very dangerous phase in the global economy. What do you see from a macro point of view of what's going on out there?
Jonathan, I don't think it's dangerous. I think it's terrifying. I really do. We're living in I've got a couple of years on you, and I've been in the business a long time, and I have never seen economic conditions as tenuous as they are right now, regardless of where you're looking at in the world, whether you're talking about the United States, whether you're talking about Europe. There's now rumblings about some real serious problems coming out of China, coming out of India. We haven't seen times like this. We're in uncharted waters. QE3 is going on right now. I mean, it's the Fed is pumping so much money into the system, they just don't call it QE3 right now. So it's been going on for quite some time. And short term, that's going to work, and short term, that's going to work fine. It's going to keep the house from falling down. But long term, for the life of me, Jonathan, I don't see how it can work. I really don't.